Hi, welcome to Understanding Business Structures and Should I Incorporate? My name is Patty Strace. I'm the Senior Manager of Scotia Professional Banking for the BC and Yukon region. Professional corporation benefits, I touched on it briefly. The personal tax on the professional you pay 46.4%. Professional corporation pays 18.62% on the first $400,000. Again, that's a huge savings for you. At 46.4%, you would pay taxes of $185,600, leaving you with $214,400 to pay the expenses of the practice, to pay yourself an income. Again, if you're under the professional corporation, you'll still have $325,520 to pay the expenses of the practice. Now, the other thing is you do get a tax deferral of $111,000 per annum, and again, that's based on the personal versus corporate tax rate. When you incorporate, you have 1 year that you don't pay any tax installments on your professional corporation, so it's deferred 1 year. However, you must remember that when you file your tax return the following year, you will have to pay your taxes. So be prepared and start a savings account. Scotiabank does offer a small business savings account, so take advantage of that. You will also not pay any personal tax installments in that first year. But again, when you do file your tax return, you will have to pay taxes, so take advantage of the Money Master for Small Business. Your liability is limited because it does go to the professional corporation. That doesn't mean that you are not responsible for the debt of the company, because I can tell you that the majority of the banks will ask for your personal guarantee, so don't be surprised. It's very rare that you can get around that. You also, if you are fortunate enough to be able to sell your practice when you decide to retire, or if you're going to move provinces, you do have a capital gains exemption of $500,000, and that's on the sale of the shares. Now, when I spoke earlier about holding companies being set up, a holding company is for when you have investments within your practice. So if you're going to buy the building that you're housing your professional business in, you will want to purchase that building within a holding company. So at that time, if you decide that you want to sell the practice, you're retiring, you can still hold the building within the holding company and become a landlord to the purchaser, or you can then turn around and sell that building as well. If you do use that example of having a holding company to hold your building, you would then sell the shares of your practice. You also receive a $10,000 tax-free death benefit. And again, keeping in mind, with the professional corporation, being taxed at the lesser rate, it gives you more money to buy equipment, renovations, and possibly the building for your after-tax dollars. Professional corporation costs. There's a one-time setup fee of $4,000 to $4,500. That is for your legal and accounting fees and for your tax expertise. So this money goes to your accountant and to your lawyer to set up everything, the registration of the company, the money that's paid to your professional college for approval of your name. So those are the costs that we're referring to. And you've got additional annual costs of $1,500 to $2,000 for a current professional corporation, and that's simply for having your financial statements prepared by your accountant, and for every year you must have your company register again just to make sure that the directors and everything are set up. Your accountant and your lawyer looks after all of that for you. Who should incorporate? I get asked this question all the time. Your taxable income, let's say, is $103,000 plus the RRSP allocation that you're allowed for the current year, $16,500, equals $119,500. Now, if your income is that high, and if you do not have any personal debts, then definitely you should be looking at incorporated. Now, I know on our side we allude to mortgages. A lot of accountants will disagree with that particular comment. So again, check with your accountant to see what his or her opinion is. So for example, if you've just been out of school for a short period of time, and if you're in dentistry or you're in medicine, the chances are you'll probably have quite a sizable debt of $200,000 to $300,000, and you're making $120,000. You do not want to incorporate yet, because you're needing to take all that money out of your professional incorporation to pay back your debt. So you must be able to have surplus in your professional incorporation. Must you leave it in your professional incorporation? Well, yes, because you're going to invest it in your professional incorporation name. And you have to ask yourself, too, what will I be doing with this money? Will I be buying a building? Will I be buying equipment? So again, talk to your accountant. I can't stress enough that you need a good accountant who understands your business, and they'll be able to advise you better. We have all sorts of resources and tools for you to help you with your practice, and we invite you to go to our getgrowingforbusiness.com to access our tools and resources. Our small business bankers are trained to understand your business. Again, I refer to you to your accountant. They're good. And we have your social blueprint for business, which is usually more for someone who has been in the business for a while, and we can tell you how to save extra money. Just consider us as part of your team, but part of your team that's not on the payroll. We can help you. Again, I encourage you to go to www.getgrowingforbusiness.com. We offer you the tools to assist you make your practice grow. We have the social business plan writer to help you create an effective business plan. And a lot of my clients say to me, but my business plan, what if I don't achieve it? It's a roadmap for you. If you don't know where you're going, if you don't know what you want to do, how will you ever get there? I often tell them, too, you know what your business plan is. It's in your head. You're telling me that it's a simple matter of putting it in writing so that you can follow it every year to see where you've gone. Do you need to change directions? Instead of going east, should I go west? But I do encourage you to do a business plan. They really are a wonderful tool. We also have the Social Blueprint for Business checkup. And again, I did mention that you should be in business for a while. But we can take a look at your accounts receivables, your accounts payables. We can tell you how to save money. If you're paying your bills on time too quick, maybe what we need to do is get you to slow them down a bit and just give you some more cash flow. Get growing sales and marketing tools. That helps you identify the right tactics to support your growth strategy. We can help. On www.getgrowingforbusiness.com, we offer access to tools, as I said before. And, of course, we have our new resource center, the webinars, the video coaching, networking, discussion forums, online directory. It's all there for you. We at Scotiabank believe that we're there to help you achieve your